And hello, everybody, and welcome to Option Pit. I'm Andrew Giovinazzi, Chief Operating Officer of Option Pit. Welcome to the House of Volatility, the House of Options, where we pretty much spend all day looking at all that stuff. Calls, puts, gamma, you name it, we look at it at Option Pit, solely devoted to making option traders become better option traders. In that vein, we have an event. Our Option Pit 4-day boot camp, popular event. It will sell out as it has in the past. Basically, it's an intro on how options work. We talk about the Greeks on a basic level, really what the income trade means, right? What the real costs associated with that are, and understanding the basics of delta neutral spreading. Also, this course will allow you to use other platforms. So, if you're an Option Express customer or you use LiveVol or some of the other platforms, we are trying to give you a basket of skills here you can take to other platforms. Okay, that's the key part, and then obviously there's more advanced courses along the line should you choose to take them and go forward. All right, that starts December 9th. I believe it's 8 hours of instruction. Right, Mark and I will both be teaching the class. If you want to see what our style is, we have a free webinar here for you to take a look at, understanding what makes the VIX and the vol products work the way they do. Speaking of vol products and volatility, what do we have today? Let's get back to VIX here. Basically, Platinum or Gold members should register Nikos for sure. You don't have to pay for it, I believe, but right, that's free for you. But you should register if you want to take it, just to reserve a spot. Okay. VIX. Okay, real simple. We're trading at around 12 3/4 for our 1 month forward look, which is in December. Remember, all of the compressed volatility from Thanksgiving is pretty much already out of the market. We're trading, 7.5 for this week. We're in the 9s for the next 2 weeks. So they've taken volatility. They've taken the decay out, the days out by depressing volatility here in the short term. There's still a fair amount of volatility here. This little spike in vol December 20th is because there's a divvy on the 19th that screws up the cost of carry just enough to alter what the volatility looks like. So that's not an unusually high vol right there on DC20, just to let you know. All right, so what we do have is we have volatility in the 10 handle. Recall this year, VIX 1 month out, the low volatility we've seen is in the 9 handle, like 9.5 30 days out. We're 1 point away. Now, 1 point as a percentage of VIX right now is pretty gigantic, right? That's 8-9% of the value of VIX right now. So that you could think of as like, that would sort of generate a dead low for VIX to get us really down to those low levels. With all this central bank stimulation and, who knows what announcement comes out of China next week, the market has had a hard time. We're kind of in this 12 handle, and this, I would feel 12 is kind of the low end here. Okay, what we do have is the future products are decaying quite a bit. Notice, the Jan future here trading 14.60, almost $2 above cash. Okay, that's a high rate of decay for the futures. The January almost is $3 full above. Okay, so future-wise, there's plenty of compression left in the futures, which has a slow-term effect on how all those vol products, UVXY, SVXY, VXX, are going to act. Right? They are going to start decaying away with VIX this low. But at least at this level, as you can see, the cash part of volatility is having a hard time going down, And at this point, you're having a hard time finding future sellers willing just to bang those down and bang that premium out. At least that's where we sit as we look today. What's interesting, I think low volatility across the board. Again, more time spreads, double calendars, maybe even I'll look at a double diagonal today in the chat. There is a little bit of short-term vol, mostly the 1 month vol, not very expensive. In the indexes, it's very, very cheap, and the market's not moving a whole lot. So if anything, maybe a short-term fly. We'll try to price one to see if it looks like we have a hard time pricing them lately just because you're just not getting a huge amount of decay with the vol this low. You know, you're looking at 9% vol. It's tough to squeak out a lot of decay out of that thing. But there's a little bit of, we got news at the end of the week on OPEC. They might do something, support prices, which could add a little volatility to the market. But again, GDP numbers were okay. It's growing at 3%, but it's less than everybody expected, which feels like it sort of threw a wet blanket on the continuing rallies that we've had. So, you know, we're rallying a little higher. I don't expect this to move too much more. I would be surprised if they took volatility down sharply, both the cash and the futures. Could happen, but I think people is a little bit of wait and see what's going on. We got Swiss referendums coming up. Just there's enough out there to keep people from selling volatility to what would be year lows, and that's where we are right now. Remember, those levels down now would be year lows, and I don't know if there's enough willing sellers to take it down that low. All right. All right, everybody. Have a good day. Mark is out for most of the day. He might be back later, but I will see you for the chat and in around 10:15. All right, everybody. Bye-bye.